Hello everyone, welcome to today's financial news segment, and in the next 5 minutes, we'll cover the latest updates and trends from the world of finance. Let's start with the headlines. U.S. hedge fund Elliott Management has reportedly entered the takeover battle for Manchester United, offering to finance bids for the football club, according to sources familiar with the matter. The activist investor is not said to be looking to buy the soccer giant outright but could take a minority stake in the club or provide debt funding. The reports follow a deadline for bids set by United's American owners. Sir Jim Ratcliffe's chemical manufacturing firm, Ineos Group, and Qatari Sheikh Jassim bin Hamad Al Thani are also reportedly competing to buy the club. Manchester United shares rose 1.6% to just under $27 since Friday's closing bell. The stock market has seen a major shift in 2023 as assets that struggled in 2022 have made a comeback, despite continued rate hikes from the Federal Reserve. Assets like Bitcoin, EV stocks, and generally unprofitable or struggling companies have soared in the first 6 weeks of the year. In addition, the hype around artificial intelligence has driven investors to buy stocks associated with AI, even if the companies are not yet profitable. Small-cap firms like Big Bear.ai and SoundHound AI have seen significant jumps in their stock prices. However, this behavior is not typical of a market with interest rates at 5%, and many are concerned about the potential risks associated with these speculative investments. Retail investors are spending a record $1.5 billion per day buying stocks, and over 20% of all market volume is coming from retail orders. This behavior is concerning to some analysts, who warn that a big market volatility event could be imminent. The Fed has signaled that more interest rate hikes will likely be needed to combat inflation that is still above its long-term target of 2%. The Fed is also reducing its balance sheet each month by about $100 billion, which is sucking liquidity out of markets. This, coupled with the behavior of investors, suggests that a big market volatility event could be imminent. Some analysts warn that the recent behavior of investors bidding up speculative stocks is fragile, and that a reaction from the Fed to incoming data and speculative investment behavior could ultimately break the tape. A new study by S&P Global has found that most low-rated bond issuers are likely exaggerating their earnings outlook, raising the risk of widespread defaults or even a black swan type event. The study analyzed every speculative grade company that announced an acquisition in 2019 and found that all but 3% of them failed to hit their target for a key earnings metric known as EBITDA the following year. S&P Global said that its latest findings show that EBITDA is often abused by smaller companies and that most U.S. speculative-grade corporate issuers cannot come close to achieving the earnings, debt, and leverage projections presented in their marketing materials at deal inception. The study highlights the elevated risk of a potential fixed-income market disruption, as companies that aren't profitable can't repay bondholders. Cryptocurrency hedge fund Galois Capital is shutting down after half of its assets got stuck in the bankrupt exchange FTX, according to a report by the Financial Times. The firm has ceased all trading operations and plans to return the remaining funds to investors. Galois became one of the high-profile victims of FTX's implosion when half of the $200 million worth of assets it managed last year were left trapped on the exchange when it collapsed. The fund plans to give back to its customers 90% of the money that isn't stuck at FTX, with the remaining 10% put on hold until all discussions are finalized. Galois had also reportedly sold its bankruptcy claims at 16 cents on the dollar. Last month, FTX said it had recovered more than $5 billion in assets that could be used to repay creditors, a figure higher than the initial $1 billion plus assets executives said they had tracked down in December.